Hi, Jonathan York, Bay Financial Partners, looking at investment markets. The sort of bull market in equities continues. Interesting, over the last 10 years, global equities have risen about 12% per annum. Now, what's given the latest sort of leg of the sort of up move is obviously continued expectations that central banks are going to cut interest rates. We've got the Fed meeting later this month, and they're expected to cut interest rates. Just really questioning whether it's sort of 25 or 50 basis points. From what we can gather from recent Fed talk, that certainly Fed Chairman Powell is really concerned that the US is getting behind on the inflation curve, and inflation really is dropping well below that 2% target. On the back of that as well, obviously you've still got renewed hopes for a China-US trade deal. It looks like there's going to be some face-to-face talks taking place very soon, and that sort of buoyed expectations that we might just get a trade deal in the near future. Some of the skeptics out there, though, sort of point the fact that it's really to the administration's advantage to sort of drag this on a little bit further, with the threat of sort of tariffs always hanging over the Chinese. But also, as you're coming obviously to the election year of 2020, if you've still got trade negotiations taking place, Trump can campaign on that sort of trying to make America great and doing the best deal possible for the US. Earnings sort of quite interesting out there. You've got some pretty impressive beats on earnings for certainly Microsoft and Goldman Sachs, and then again some rather disappointing earnings results as well. But at the present, sort of guidance is still sort of positive. And I say, if you do see lower rates and you get this trade deal sort of taking place between China and the US, that's all positive for the US economy and should be positive for earnings. So at present, it really is pretty tough to sort of short equities. Potentially there is a little bit of a correction out there, sort of waiting to take place. But it's just a question of sort of not missing the next move, because if interest rates are coming down, then these valuations aren't expensive. Well, so far it's been sort of pretty muted in its reaction, with obviously the increased tensions in the Middle East. Iran is trying to play hardball, sort of taking over a UK tanker, potentially sort of arresting 15 CIA operatives in Iran, and potentially sort of targeting them for the death penalty. But against that backdrop, oil really hasn't done too much. It's still sort of stuck 55.60. No real surprises in the UK. Boris Johnson has been elected leader of the Conservative Party and hence the new Prime Minister. It's just going to be very interesting to see how he sort of transitions now into trying to sort of get Brexit sorted. I think 31st of October is the key date, and he's sort of gone on record as saying that if there's no deal by then he will pull the UK out with a no deal on Brexit. Most analysts believe that will be pretty disastrous. Boris Johnson sort of tries to flippantly sort of wave that off and say, no, it won't, it will be good. But you know, it's going to be really interesting to see how it sort of plays through. But also as well, you know, he's very inexperienced and really has shown sort of a, you know, quite a lack of sort of backbone over the last sort of 2 to 3 months as he's sort of been on the campaign trail and hit with some pretty tough questions, which really he's just avoided. And still, just because you've got a new leader, you've still got the same issues with Brexit. Same issues to try and resolve, and you know, the clock that's ticking down towards that sort of deadline of 31st of October. And plus as well, it looks like he's going to lose some pretty experienced politicians who really just don't like his sort of style or his views. Here in New Zealand, interesting, one of the high street banks has just cut its 2-year mortgage rate. That is now a fixed 2-year mortgage rate below 3.8%. Now, certainly these low rates, really should underpin the housing market, and it's just going to be very interesting to see how this sort of plays through. Certainly there is still a lack of supply. There's pretty high demand, and with cheaper borrowing as well, that should also sort of underpin the housing market. A little bit of confidence out there, and should be good for the economy. But obviously the flip side of low interest rates is that savers are suffering. Term deposits and bonds are pretty low in terms of historical interest rates. Say Trustpower got that 7-year bond, minimum rate will be 3.35. So what that has seen is pretty high demand out there for dividend shares, and that we expect that to sort of continue to take place over the next sort of 3 to 6 months. And if you're interested in discussing what's available, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.